So do you ever look at internal controls and then you're wondering, so what do I do with this information in terms of risk assessment? We talked in an earlier video about walkthroughs and how to do that, but then once you obtain this information, the question is, what do I do with it? How does it impact the control risk assessment? Some of the questions you might ask are, if controls are not so good, can I ever assess control risk at below high? Another question you might entertain is, if controls are really strong, when should I test those for effectiveness? Another question you might have is, if controls are real weak, what impact is that going to have on the substantive procedures that I might perform later on or that I might plan in this risk assessment phase? We've gone through a lot of information in the prior videos, and we've gathered a lot of information together, but at this stage, we're now assessing the risk levels. Most firms use high, moderate, or low, but we're going to talk about how to assess control risk in this video at those three levels. So let's get into chapter 16, control risk. As we start chapter 16, I want you to think about your risk assessment form. You see it in your mind now, and on that form we've got cash and receivables / revenues, inventory / maybe cost of goods sold, or accounts payable / expenses. So we've got those account balances or transaction cycles, and then out to the right of those titles, you're going to see a column for inherent risk, a column for control risk, and a column for risk of material misstatement. And then over, up, under, say cash, for example, you're going to see the relevant assertions for that area. Now, you're deciding about the relevant assertions, what they are. We talked about that in a previous video. But you see that picture in your mind. We've got cash, the relevant assertions, then in the columns, inherent risk, control risk, and then risk of material misstatement. Today we're focusing on that control risk element. In most audits of small to medium-sized entities, CPAs normally end up assessing control risk at high. If you do that, then that makes the process of determining your risk level for control risk relatively easy. But you're going to see in this video that sometimes you may not want to do that. Sometimes you may want to bring your control risk below high, and we'll talk about what you need to do in order to do that. One of the problems that I see CPAs run into, a mistake that is often made, is because that we normally go to high on control risk, we might think control risk has no impact on the substantive procedures that we're going to perform. And that's simply not always true. You're going to see an illustration in a moment where there are control weaknesses. We go to high on control risk, and yet the situation, the internal control weaknesses, has a direct influence on what we're going to do, what substantive procedures we would perform. So don't make the mistake of thinking if my control risk is high and I always do that it never changes my audit program or my audit steps, because it very well can and should, I would add, when the internal controls are extremely weak. The first question I've got for chapter 16 is, how do you know if your controls are okay? Well, you're going to determine whether or not the controls are properly designed and implemented as you do the walkthroughs. See the prior video for that. But after you do a walkthrough, say, of receivables and revenues, you're going to know whether or not the controls are sufficiently segregated and whether or not they're being performed in a timely manner. And then based on those walkthroughs, you're making an assessment, the control risk assessment, at this stage. Now, you've always got the choice to assess control risk at high. You have to do the walkthrough before you make that assessment, but once you do the walkthrough and you do the other risk assessment procedures, then you've got the freedom to assess control risk at high if that's what you would like to do. Now, you're going to see in a moment you may or may not want to do that. Another question in this chapter is, if controls are weak, can I assess control risk below high? And the answer is no. The only way you can bring control risk below high or below maximum is for you to test the controls for effectiveness, and then the test proves that the controls are effective. If you decide to test the controls for effectiveness and then the test shows they're not working as they should be, then your control risk has to be high because your test is showing the controls are not functioning in the manner that they should. So your control risk in that situation would be high. Now, if you test controls and you find that they are effective, then yes, you can bring your control risk down to moderate or low, and we're going to see in a minute when you might want to do that. Now, I've got a situation here, and the controls are really weak. I won't go through all the details here, but basically you've got 2 employees that are doing everything. In other words, there's a lack of segregation of duties. When you do the walkthrough and you see this type of situation, then the alarms should be going off in your head as the auditor, and you should immediately start thinking, my control risk is high. And then the next thing you should think about is, I've got to do more work. Now, I keep saying this, but it's always true. More risk, more work. Anytime you see a situation like this one where the controls are simply not there, you're going to plan, or you should plan, to do additional work. Weak controls means that your control risk is high because your controls are not designed appropriately or they are not in use. In other words, they're not going to prevent or detect a material misstatement. Another question, will the substantive approach change when controls are weak? Well, we just answered that question. If they're weak, then we should be performing some extended procedures, and I define extended as more than what we normally do. So if you have a basic set of procedures that you do, say for cash, and the internal controls are weak, you don't have segregation of duties, then you should plan to perform some type of extended procedures to look for whether or not there's a material misstatement in that area. Quite often these additional procedures, they are fraud detection procedures. So if your controls for cash were weak, for example, you might test the collection process for several days to see whether or not people are stealing monies as they come into the business. So normally with cash, you would test the bank reconciliations, you'd send a confirmation, you do those types of normal procedures. But if there's a real weakness in the internal controls, Then we're going to plan and perform an extended procedure such as those tests of receipts by day to see whether or not somebody's stealing any money. Here's another example of extended procedures. So if you're afraid that somebody's stealing money as it comes in and then they're writing off the accounts receivable balances, then you do a test of the write-offs or the write-downs in receivable. So that would be another extended procedure that you could perform. Obviously, these are just examples, but I wanted you to see in some cases when controls are weak, we're planning extended procedures. Next question. If you assess control risk below high, what must you do? On this slide, you see the answer here. You test controls for effectiveness. So if we go back to the example we were looking at just a minute ago where you had two receiving clerks and they did everything, suppose that the company, after you tell them about these weaknesses, that in the next year they implement appropriate procedures, they're performed in a timely manner, everything is working the way that it should be. In that situation, maybe the next year you would test controls for effectiveness if you wanted to. Now again, you can't bring control risk down unless you have a basis for doing so. And the basis for the reduction of control risk is your test of controls for effectiveness. Now, there's three responses after you do your risk assessment work, three potential responses, and those include a test of details, substantive analytics, and then a test of controls for effectiveness. So this is the third element or the third potential response to risk after you do your risk assessment. We're going to do some future videos about those three responses, but today we're looking at this test of controls for effectiveness. So if you want to, you can perform the test of controls for effectiveness. This is a decision you'll make based on efficiency considerations. My next slide says, can you assess control risk at high even when controls are okay? Well, you can. And this question relates to what we were just looking at. If you have controls that are really good, you can assess your control risk at high. Now, you may be thinking, that doesn't sound right. Controls are good, but you're assessing control risk at high. What I'm saying is you can do this as an efficiency decision. We said a moment ago that to bring control risk down, you have to test controls for effectiveness. If you do the test of controls and it takes 8 hours to do that, then alternatively, you might be able to test the detail, say, in 4 hours. Well, which of those would you like to do, the 8 hours or the 4 hours? I'm going to choose the 4 hours. And because I'm not doing a test of controls for effectiveness, my control risk has to be high. So if control risks are at high and controls are okay, you don't test controls if that takes more time than a fully substantive approach. So I'll say it again, the test of controls for effectiveness is a decision that you make as the auditor. If it takes less time to test the controls than to do the substantive procedures, the test of details, by all means, you want to test the controls for effectiveness. Here's my main point about testing controls. If you do your walkthroughs and you see that controls are designed okay and they've been implemented, then the decision about whether or not to test controls is based on how much time it takes to test the controls versus doing alternative substantive procedures such as test of details or substantive analytics. In summary, we've said that you can assess control risk at high, moderate, or low. Most of the time, you're going to assess control risk at high for small to medium-sized entities that you're auditing. You can bring control risk below high if you test controls for effectiveness, but if you decide in every audit I want to go to a high control risk, you've got the option to do that. Just understand that sometimes you can test controls for effectiveness as a basis for bringing control risk lower, and you can save some time because the tested controls can take less time than the substantive procedures. In the next video, we're going to take a look at the risk of material misstatement. We've now defined inherent risk and control risk and how to come up with those risk assessment levels. We're getting closer to the end of the book, so stay with us until we get all the way through. And if you haven't gotten a copy of my book, I invite you to go out on Amazon and pick up Audit Risk Assessment Made Easy, Seeing What Others Miss. So pick up your copy today. Take care, and bye now.